Welcome everyone. Thank you for joining us at the Better Investing Club Treasurer Workshop. My name is Dennis Genord. I'm the Director of Education and Chapter Relations for Better Investing, and real glad that you could join us tonight. In this session of the workshop series, you'll learn how to be the best treasurer your investment club has ever had. The job of investment club treasurer can be intimidating, as we all know. But Doug Gerlach, president of iClub Central, he'll demonstrate how anyone can do the job absolutely successfully. Now, folks, there's a lot of ground to cover tonight, so I'm going to get right to the introduction of our presenter. And for more than 19 years, Doug Gerlach has taught individuals and investment clubs to make smarter decisions about investing in the stock market through books, software tools, websites, and educational presentations Doug does all across the U.S. Doug is the president of iClub Central. iClub Central is the maker of software for individual investors and investment clubs. He's the author of 6 financial books and has written numerous articles for a variety of publications. Doug's a very familiar name in the Better Investing community, very well respected and a popular speaker at Better Investing events on such topics as investing, getting started in the stock market, and running a successful investment club. So please join me in welcoming Doug Gerlach. Doug?
Thank you, Dennis. Before we get started with our presentation tonight, I'd like to just go over some of the GoToWebinar basics for those of you who may be new to the webinar format. If you're participating in our live webinar tonight, you should be able to hear me and Dennis now. If you're unable to hear, we have some instructions here on the screen. Check the volume on your computer, check that your speakers or headphones are plugged in, or your Windows sound settings. In the GoToWebinar application, has a little wizard that can help you check those sound settings. And if you're continuing to have problems, we suggest that you contact gotowebinar.com directly on their website or via their toll-free number at 800-263-6317. Now, you do not need a microphone in order to participate. If the sound or graphics are choppy, we suggest that you turn off any unnecessary programs that may be running in the background. Don't connect wirelessly if you can help it. A wired connection to the internet will always be much faster than Wi-Fi. And you can always listen using the telephone, which will free up your computer's processing power to process the video component of tonight's presentation. And again, for any problems, please go ahead and contact GoToWebinar right away at their toll-free number or on their website. Now, we will have time for some questions tonight, so please use that questions box in the GoToWebinar application to type in your questions. And we do have some helpers in the back office tonight. We have Charles Bard and Sean Pulrang, and they will be helping to answer some of your questions as well. And I'll have some opportunity to address them during the presentation as well as at the end. Now, if you'd like the handout for tonight's presentation, it's right there as well in the GoToWebinar application. Look for the Handouts tab, and the PDF is there. It's called 2016-07 Gerlach Be the Best Treasurer, and there's also a copy of our club audit checklist, which I'll reference later in the presentation. So you may want to grab a copy of that as well. You can print it out quickly, you can save it for later. We'll make it available when we archive this presentation as well. So let's get started. We're talking tonight about the job of investment club treasurer. Often one of the most detailed positions in an investment club requires someone who's working on an ongoing basis to manage the club's books, to manage the club's relationship with its broker, to enter transactions into the club accounting software of your choice. And so there are a lot of tasks that are required of a person in this position. Tonight we're going to talk about those tasks and give you an overview of what the job of treasurer entails, both from a monthly perspective, an occasional perspective, an annual perspective, and also starting right at the beginning. Some of the things that I think you need to know before you even get started with your investment club. So I've called these how to properly set up your investment club. And that starts with just 4 steps. And those 4 steps, in my mind, are these. Number one, your club should be a member of Better Investing. I'm a lifetime member of Better Investing and have been a member since 1993. And I think the organization is invaluable, supporting both individual investors and investment clubs. And there are resources and knowledge that the organization has that goes back for more than half a century. So if you have a question about investment clubs, they can help you find answers. So I think it's a reasonable investment for you as an investor or a club member to be a participant in the Better Investing community. Number two, you have to have your own tax ID number. Number three, you must commit to the unit valuation system of accounting. And number four, you should be aware that this webinar that you're watching right now is one of dozens that Better Investing and iClub Central have produced to help you learn about investing and investment clubs. Let me just talk about these in a little more detail. As I mentioned, Better Investing, the nonprofit investor education organization, was founded in the 1950s, supporting investment clubs and individual investors. And while much has changed about investing in the stock market since the 1950s till today, much has remained the same, including the focus on fundamental analysis of stocks, which continues to be a valid way for individual investors to participate in the stock market. So the methods that Better Investing teaches you and your fellow club members can help you to be consistently among those clubs that outperform the stock market if you deploy those tools and use them as they are taught to you by Better Investing. So you can find out plenty more on the Better Investing website at betterinvesting.org. Number two, you should have your own tax ID number. Occasionally, we hear from investment clubs that use the Social Security number of one of their members in order to set up brokerage accounts and bank accounts, and this is problematic. It is easy and free to get a tax ID number from the IRS, and that's the number that you use to open your bank or brokerage account and to file your federal and state tax returns. It's known as an Employer Identification Number, or EIN. You can go to the IRS website and you can do a quick search, find the Employer Identification Number, or EIN, and you can apply online and get an instant response. It's easy to do, and it's essential for any new investment club. If your club does not have one and you've already set up your accounts, you should go through the process of getting things switched over to your own tax ID number. Number three is that you need to be familiar with the unit value system of accounting. Investment clubs use the unit value system, which is very similar to the method used by mutual funds to track the value of each shareholder's investment in that fund. So as an investment club, you're actually creating a mini investment club, a mini mutual fund of your own. And so you can use the same method of accounting. In a unit value system, the number of units changes whenever money is invested into or withdrawn from the club. So there's potentially no limit to the number of units that an investment club might have. They could start with 100 units and end up with 100,000 units 20 years down the road. And there's nothing wrong with that. It's open-ended. Now, the value of the unit, whether it's $10 or $30 or $18 or $9, changes whenever the club's investments increase or decrease. And so the software that we make will help you to use this method. Here's just a quick example of how the unit value system works. In mutual funds, you may have heard of the phrase net asset value. And that is, again, very similar to what we are doing in our mutual fund accounting. We track the value of a single share at any time. When you start your club, you set the unit value that you start with, and typically it's $10, and there's no reason for that other than it's an arbitrary, easy to understand amount. Now, after your first valuation, the unit value is going to change, and it's going to change with just about every transaction after that. So if you have 12 people in your club and you start it up and each person contributes $30, the total club value is $360. The unit value is $10, thus there are 36 units at the start of this investment club. So let's say that we're going to take expenses out of the equation, take commissions out, and the club buys $360 of stock in a company. So they've invested 100% of the money that they've taken in at that first meeting to buying stock. At the next meeting, that value of that stock increases to $405. So now the new unit value is $405 divided by the new number of shares, or the old number of shares, which is 36, to give you $11.25 a unit. So now all of the money, that the $30 that the club members are putting in this month, are buying units at $11.25 a share. So each member's $30 doesn't get them 3 shares anymore, it gets them 2.67 shares. And now there are 68 shares in the club. And this process repeats on a monthly basis as the club values its portfolio and calculates the unit value. So once you understand this concept, you'll understand a whole lot more about what can and can't be done with investment club accounting. But it's very important that you understand the unit value system and how it works. Now, my fourth tip here is that, like this webinar that you're watching and listening to right now, there are dozens and dozens of webinars that both Better Investing and iClub Central have produced over the last 10 years, and they've been archived and they're ready for viewing on demand by Better Investing members, by users of iClub Central tools, by viewers on the internet. So when we talk about some of the topics tonight, I'll just be able to touch on the very top layer of some of these subjects that I've produced half-hour or 45-minute webinars that really go deep and go into and give you the demonstration on the particulars of those topics. So I want to make sure that you're aware of those as a treasurer, as a member of a club. When you're transitioning to a new treasurer, point them to those webinars so they can view and get comfortable and understand and see how these club tools work in the real world. So let's talk about the right tools for the right job. It's key to your investment club that you have the right tools. And there really are some very basic tools. And we're not going to talk about the stock selection and stock analysis tools that are key to managing a successful equity portfolio. We're going to talk about the software and the relationships that you need to get your club going. But first, let's talk about the wrong way to do things. There are 2 things that we run into frequently that are problematic in the longer term. The first is that clubs that try to use a spreadsheet or worse, paper and pencil to do the unit value accounting, or some other method of accounting, such as simple percentages, and that's a problem. The second problem is that we run into people who think their club should be operated on an equal ownership basis, which means they think that every member should have the same value in the club as every other member at every point in time in the club's history. And these are both problematic. Let me tell you why these are both problematic. Manual accounting systems using spreadsheets or paper and pencil are simply too simplistic to handle the complexities of a unit value system of accounting. For one thing, a manual accounting method won't support time-weighted distributions. This means that throughout the year, as your club is generating income and paying expenses and generating gains and losses, the software is able to keep track of who was a member at what point in time at the date on which each of those income, expense, or gain loss items were recorded on the books, and then use that percentage to allocate at year end. Without that software in place, you're stuck using a manual method which is really overly simplistic and often creates unfair situations. If people withdraw or deposit large amounts during the year, for instance, the simple non-time weighted method of distributing all of those income and expense items at year end can create enormous disparity. So the software really is far superior. Manual accounting system spreadsheets are not scalable over time. There's no migration path to get you into a software solution. As the club gets bigger, it's impossible just about to find a new treasurer and teach them how to do this complex unit value system by hand. And if you use BetterInvesting sample partnership agreement to start your club, manual accounting probably isn't going to be accommodated by the things that your club adopted, the provisions that your club adopted in that partnership agreement. So the very nature of your accounting system, it runs contrary to the things that everyone agreed to when you started the club. We have clubs that have been using spreadsheets for many, 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 many years, and now they want to convert, and there's no clear path for them to do so. So in order to use a software solution, they have to enter everything by hand, or they have to use a workaround method to choose a point in time and lose a lot of their club history. And if they had done it 5 years ago, or 8 years ago, or 10 years ago, if they had made that switch, they would be much happier today. So don't get started down this pathway, because there's no end game. It will just simply not turn out well. Now, equal ownership is another item that comes up quite a bit. Clubs want to mandate equality. They're going to keep all the members as equal financial participants. Everyone is going to contribute the exact same amount every month, and every month we're going to have votes, and everyone is going to have exactly the same vote weight in the voting, and there's not going to be anyone owning more of the club and then controlling more of the club. There's not going to be anyone owning less than the club and be not as interested, and it's all going to be democratic and fair. But except it's not. There are a lot of problems with these equal ownership clubs. They simply don't work for both pragmatic and for accounting reasons. Here are 4 reasons why those equal ownership clubs don't work. 1, it's unfair to let the late payers have use of the club's money for a month or more. Let's face it, not everyone in your club is going to come to every single meeting and bring their dues with them. So if they say, oh, I'll give you my money next month, but you're going to backdate their payment to the prior month's meeting that they missed, in effect, the club doesn't get the use of the money, use of the capital that that member was supposed to give you but didn't. And then what happens if the club's portfolio goes up? Well, it's just like if you went to your broker, found a stock that was 20% lower a month ago and said, I want to buy it at the month ago price. Your broker would look at you like you were crazy. It's not going to happen. But yet this is what equal ownership clubs allow to happen every time, by allowing members to be late with their money and then still get full credit as if they had paid in the dollars and attended the meeting. The second problem is that some members may wish to contribute more capital to the club. Now, you set your minimum dues at $30 or $50 or $75, whatever it is. Some members may want to contribute more to the club, and that works to everyone's benefit because it increases the club's buying power and it decreases the expenses that the club has to pay. So those can increase the club's overall return. But no, this club won't allow it because we're all equal. So even though you want to contribute more, you cannot. And if we want to raise more capital, we have to raise it for everyone, raise the minimum dues for everyone, and then you run the potential of losing some members because they are unable to make that higher contribution. The third problem is that in an investment club, we allow members to make partial withdrawals. If you have a need for cash, then you can withdraw the funds from your partnership account in the club. You can take out part of it, you can withdraw fully. And we advise that you don't put restrictions on people's ability to withdraw their money. But in an equal ownership club, it's all or nothing. So if you need the money, you have to leave the club. that doesn't work for anyone's benefit to lose a good member for financial reasons when that person could be a contributing member of the club. And the fourth reason is that if you continue along this path for several years, if everyone is contributing $50 a month, over 5 years, we're talking about a $3,000 per person that's been contributed to the club. And if you want to add a new member, you have to say, well, they have to put in as much as everyone else. So now you've restricted the pool because you need not someone who can put in $50 a month, but someone who can put in $3,000 a month. Well, right there, we've just lost a whole lot of people who might be interested in your club, but can't buy in at that level. And the problem with a buy-in like this is that, again, we're allowing people to purchase 5 years of history for the cost of $1 today. And that is, again, vastly unfair to the existing members of the club. And it's a great thing if your club has been successful and you've been able to earn a good return. Hey, I'd love to join a club like that where I could put in my money and capture the gains that have been made over the last few years. But it's simply unreasonable. So we suggest that you stay away from any type of scheme that attempts to mandate equal ownership in your investment club. Now, let's talk about the right tools. What do you need to run your club successfully? Well, obviously, my iClub is the product of iClub Central that accommodates the unit value system of accounting and has a lot of other features that help investment clubs to operate successfully. So we're going to take a look at how you can run your club using my iClub transactionally in tonight's webinar. You'll also need a brokerage account, and you may or may not need a bank or credit union account. Let's take a look at those three. Now, my iClub is the accounting and operations tool for investment clubs, operates in the cloud on a web server. It's endorsed by BetterInvesting, and it handles not only the club record keeping, but also reporting, document storage, email communications, a watch list, portfolio management, calendar, and much more. We have online voting modules that help you to conduct business in between club meetings if you allow, or to support online investment clubs, and it's all on a website. It's an annual subscription product, and it covers unlimited numbers of members and transactions, so you don't have to worry about exceeding a certain number of transactions or a certain number of members. And at new investment clubs, to check with BetterInvesting for special offers that can help you get started with my iClub during your first year. We're going to talk about my iClub, and I'm going to step through the transactions and how easy it is to use my iClub to handle the monthly and the occasional and the annual treasurer tasks. And we'll be able to answer questions about the program as well. Now, you will need a brokerage account in an investment club because you want to be investing. Most popular online brokerage firms support investment clubs, so they have an option for investment clubs. Now, it's always a little bit dicey trying to make recommendations. Everyone has different experiences with different brokerage firms. Sometimes, depending on some circumstances and who you have on the other end of the line, let's face it, the customer service reps don't deal with a lot of investment clubs at the big online brokerage firms, so they may not know all the answers right away. But we have customers and BetterInvesting members who use a whole array of the best-known brokerage firms and are using them successfully and are very happy with them. Now, we suggest that you don't choose on the basis of commissions alone. However, most online brokerage commissions these days are pretty reasonable, and there's not a whole lot of variation. We're looking at commissions in the $10 per transaction range, which is terrific for an investment club. But they may also offer check writing or have local branches, which can be useful when you're making deposits or when you have trouble and you want to get answers right away instead of sitting on hold. They may support electronic transfers, and again, these are things that can make the treasurer's job a lot easier. Now, our My iClub tool allows, we have a BrokerSync application that supports importing transactions from Folio Investing, TD Ameritrade, Charles Schwab, and Scottrade. And these are four of the most popular investment club brokerage accounts, brokerage firms, rather, that our customers are using. And we periodically we add more brokers to that list. But those are some of the most popular ones. That BrokerSync means that instead of entering all of your security transactions every month, you can import them from your brokerage firm account, and that way it facilitates the treasurer's job a little bit by allowing you to bypass some of that record keeping. Now, your bank account is something that many clubs are trying to figure out how to do without a separate bank account. Because brokerage firms will accept member check deposits sometimes, and you need to figure out with each brokerage firm how the check should be written. There can be a special way that your members would write the check instead of just making it out to the club's name. They could make it out to the brokerage firm for benefit of FBO, your account name or your account number, and then those checks can be deposited directly into your brokerage account. If your broker offers check writing, again, this can be useful. You can completely eliminate the bank and consolidate in a single brokerage firm. Local bank branches can be very useful, and many people find that credit unions or local banks or savings banks are more amenable to investment clubs than the national or even the regional banks, which have high minimums and require monthly in order to maintain your conduit that accepts your member deposits, and then you write a check or you transfer the money to your brokerage firm. So we're not using a lot of the bank services other than the ability to write checks to pay for expenses and the ability to accept deposits. So let's go ahead and talk about the treasurer's monthly tasks. And these are the things that the treasurer should be doing as part of the pre-meeting prep and the post-meeting wrap-up at the My iClub screens that allow you of transactions as we go through it. So prior to each meeting, it's important that the treasurer sit down and make sure that all transactions have been entered since the last meeting. Security distributions, which would include dividends, interest, meeting, purchases, sales, reinvestments, etc. You should reconcile your books every month prior to the meeting, making sure that your financial account statements match, and it's very important that you do this on a monthly before they multiply. And then we're going to update the valuations of all your club holdings. We're going to set in the program the price of all of the stocks and other securities your club might own, and then let your club members know that those reports are. So entering a dividend is pretty straightforward. My iClub will support distributions of multiple types, as well as reinvested dividends on a single screen. So here is the simple screen that says record the cash distribution. A dividend is a type of distribution. There are other types of distributions that securities can make. They're mutual funds or real estate investment trusts. Other securities can make other types of distributions, and a dividend is simply one. The security distribution term, that's what we're talking about here. So this screen is very straightforward to enter the select the date, select the symbol, select the ex-dividend date, and this is very important when you're entering security transactions, security dividends rather. You need to make sure that you have the correct ex-dividend date for that distribution. The ex-dividend date is the date on which you need to be an owner of the shares in order to receive the distribution, to receive the cash dividend. And several years ago, there was a lower rate for certain dividends that was meant to reward investors as opposed to traders. And so that qualified distribution rate lowered the tax rate on certain dividends. So as a result, we needed to capture the ex-dividend date because that was the date that helped qualify whether that dividend was eligible for the lower tax treatment. Now, of course, tax law changes took away that tax break and raised the tax level on distributions for most, but not for all investors. So even though maybe perhaps everyone in your club is above the threshold, the AGI threshold, and must pay full taxes on the dividends, we still need to capture the qualifying distribution amount, the qualifying dividend amount for those who might be eligible for that lower tax treatment. Now, I'll point out here that we have a link here that says find it, so you can look up in our database the ex-dividend date for any security that you might be entering there. So make sure that this ex-dividend date is right. Your broker may provide this on your account statement, but they also may not. Don't make it up. Look up and make sure you've got the correct ex-dividend date. Select the type, select the amount, and you'll notice here there's a foreign tax box. If your company is headquartered outside the US and they're paying dividends, then they would be withholding a certain amount of tax from the dividend before they send it over to you in the US. And so we need to capture that amount of that foreign tax. The foreign tax is important to capture because you, as an individual taxpayer, will get a credit for any foreign taxes that you pay to most countries. So that means that you get a deduction, a reduction in your tax bill by the amount that you pay to countries that have a tax treaty with the U.S. So it's important to enter it if that is the case. Select the cash account, enter the comments, and then we can click the enter button and record that transaction. Now, the other important thing to keep in mind when we're entering dividends from securities is the tip up here in the golden star that reminds us to enter dividends in the security section, not as cash transactions. So any time a stock pays a dividend, we need to record it as a security transaction, not as a cash transaction. And that's again because we need to capture that ex-dividend date and record the underlying security that paid that dividend. So let's move on and talk about recording an expense. Again, very straightforward. The screen is very simple to enter those expenses. We have the date, we have the amount, we have the account that it was paid, we have the tax status, whether it's deductible or non-deductible. And again, you'll need to do the research and understand what makes a deductible and what makes a non-deductible investing expense. On the help screen here, it mentions that if you're printing copies of making copies of reports for your club, that's probably a deductible investment expense. But if you are ordering pizza for a club meeting, food is never a deductible expense, so you would select non-deductible there. We have another option here for the distribution method. We support two methods of distributing expenses in your club. One is by ownership share, so that you can, when you record an expense, it gets allocated to all members according to their ownership share. And then there's also a method of equal ownership. So if you had 10 members and a $100 expense, you could charge everyone $10 for those shares. The default is by ownership share, and you should not use the equal allocation method unless you understand what you're doing and your club partnership agreement supports that method. The IRS expects that you're going to use the weighted ownership share of of expenses, because that's what's considered fair. If you give preferential treatment and charge certain people more expenses or less expenses, you have to justify that in your partnership agreement and make sure that everyone agrees to it. My tip here is to remember that investment expenses, while they are deductible by individual taxpayers, it's only after they exceed a ceiling of 2% of your adjusted gross income. So that means if your adjusted gross income is $100,000, only expenses that exceed 2% of $100,000 or $2,000 are deductible. So if you have $2,100 of investment expenses, deductible investment expenses, only $100 of it are you able to actually apply to your investment expenses on your tax return. The first $2,000 doesn't meet the ceiling, and so it's disregarded. So even if an expense is deductible, it doesn't mean that it's desirable. So stick to expenses that support your club, that are essential to your club. Don't get fooled into thinking that just because an expense is deductible, that you can justify writing it off as part of your investment club. So reconciling the books, as I mentioned, is very important. The nature of unit value accounting means that tiny errors magnify over time and create much larger discrepancies. So we're going to make sure to catch those early. It's the best defense. So simply we can run a report of all of the transactions and just check them off, just like you would reconcile your checkbook, balance your checkbook on a monthly basis. Do that, and then you can create your valuation. The club treasurer has to generate one and only one valuation of the club portfolio each month. That's what your partnership agreement says. We don't create multiple ones. We don't create a second valuation statement just prior to the club meeting. We might want to do the same valuation date on a monthly basis, and it should be as close to the club's meeting date as possible. It used to be that you had to wait to get the newspaper to get week closing prices, and then it was complicated to update. Now you can update online. You can update these prices the valuation prices very quickly. So the night before, you can be updating the club's valuation so that you've got a current valuation to distribute at the club meeting. The valuation is what determines that monthly unit value. So in my iClub, you go to the Create Valuation screen, select a date, and the program delivers all of the current prices. So you can see here the prices are all automatically filled in, and you can confirm over here the default price date, which shows you that all of these are current prices as of the date selected, which was July 1st, 2006. Now sometimes you might end up holding securities that are not dated. And so that is my recommendation here. Make sure you check this price date column. If you've got a stock that was delisted, for instance, or changed its ticker symbol, or was acquired, or had something else happen to it, the default price date there would be a different date, and that would be your clue that something isn't right and you need to follow up on it. So once you've created that valuation, you'll be able to allow that valuation statement to be generated by your club members. They can view it. They can download it from the My iClub website, so you don't even have to print it and bring it to meetings. Now, after each meeting, there are a couple of things you want to take care of. This is where we need to enter and deposit the member payments. So the club members made their member payments, they gave you checks, so now you need to deposit those in the bank or broker, and you need to enter them on the books. You need to enter any security purchases or sales approved at the meeting, and then we want you to do a backup on a monthly basis. So here's the screen to enter the member deposits. It makes it pretty easy because if you have a default amount, you can set that default amount right here. You can set the account, you can set the date, and then recalculate, and everyone will be filled in with that same amount. And if you have a member who is missing, you can just tab down, delete that amount for that member, and then at the bottom, the total should be what you've made your deposit, the deposit amount. And so it's a real easy way to double check and make sure that you've got all of the members' checks included in that deposit. Now, our recommendation is we have a member fee transaction type. You can see over here. And we have a member deposit. The member deposit, these are what some people call dues. We prefer to call them member deposits. And then we have member fees, which are used for penalty situations. A lot of clubs use late fees, and that's sort of archaic. We recommend that it makes the treasurer's job a lot easier. They have to be an enforcer to collect late fees. So our tip here is to avoid member fees. Don't even use them. The only time you would use them are for a penalty situation where someone bounced a check, for instance. Otherwise, skip the fees altogether. Keep the job simple. It's complicated enough. You don't need to make it harder by having to collect late fees from members who couldn't attend meetings. Now, buying a security, again, is pretty straightforward. You've got your account confirmation, trade confirmation from the broker or the account statement, and so we can enter the information right here on the screen. The date of the transaction, the symbol, the number of shares, the cost per share, the commission and or service fee, and then the total cost down below and the account. Now, the tip here when you're entering these transactions is that the cost per share, right here, the cost per share is calculated. So you shouldn't enter it here. It doesn't matter if it matches your brokerage statement or not. What's important to match is the number of shares and the total cost. And the cost per share just gets calculated by the program. So when you're entering these, we suggest you enter the shares and the total cost and let the program calculate the cost per share. Click Submit down at the bottom and we're ready to go. I want to take a moment here and just suggest that you avoid certain types of securities that cause problems for club accounting and club treasurers. Anything with partners or partnership in the name, just a master limited partnership, a general partnership, a limited partnership, these cause significant problems with investment club accounting, so we recommend that you avoid those, as well as royalty trusts. These can be good income-generating opportunities for individual investors, but your investment club should be focused not on income, but on capital appreciation and total return. These MLPs and royalty trusts may be great for individuals in your club to hold in their personal portfolios, but they should be avoided in investment club portfolios. Similarly, real estate investment trusts or widely held fixed income trusts with its or commodity-based exchange-traded funds, ETFs, that hold precious metals or mortgages. Those should all be avoided. They cause a lot of complications for investment club accounting. The prepackaged folios or baskets should also be avoided simply because they hold hundreds of securities, but yet they are not a single mutual fund, so you have to record transactions for hundreds of different stocks. So again, it becomes pretty onerous as an investment club. So recommend avoiding these. If you're hold any of these securities now, we recommend that you get rid of them before year end to avoid headaches during tax season next year. Now, after you've completed that, we suggest that you back up the data on a regular basis, and we provide a backup manager which allows you to back up your club data on our servers as many times as you like. So you can see here that in this investment club, there's just about an annual backup. You'll see every year or so. There's a backup that's been done at one point or another. Over here, there's a recover button. So these backups, you can click, you can download the backup by clicking on a link. You can delete backups to clean them up if you want, or you can make a backup by clicking the button down below. The backup manager is integrated in the program. It allows you to create these backups. Now, our servers are backed up, and we have a redundant drive array, a RAID array. So we have protections in place, and we have regular backups that are made onto external media as well. But that protects the entire server. That protects, if our server crashes, we can restore it. If you mess up your club database and you don't have a backup and you've actually accidentally deleted all of your data, that's not something that we can go into the database and recover for you. So the backup manager is your protection against yourself. Our server protection protects against the external circumstances that can cause data loss across a whole web server or network. So we have that part of the protection covered, but we're not protecting you against you gave someone had treasurer privileges and didn't understand what they were doing and accidentally entered a lot of transactions wrong or something like that. So the backup manager allows you to make those backups. My advice is if you've got a complicated or unusual transaction that you're entering for the first time, that you come to the backup manager first here in the utility section and you make a backup. Then if you mess up, all you got to do is go back in time, click that recover button, and boom, you're at where you were 15 minutes ago before you started entering that transaction, and you can do it again. So use the backup data, the backup manager, to back up your club data on a regular basis. Now we also have an export function that allows you to export a copy of your data to your computer. And again, why is that important? Well, this protects you if your account, someone in your club, again, has the wrong password, has the wrong credentials, if their personal computer gets hacked, bad things can happen. So having an external backup, again, is good protection. You can re-import it back into the program if you need to. After you create and export this file, click the export button, it saves it to your hard drive, copy that file onto a USB drive. Email it to yourself using Gmail and keep it on the Gmail server. Don't keep it on your computer, because if your computer bricks, the hard drive bricks or crashes or your home catches on fire, your backup is gone along with everything else. So you want to make sure to save that in an external place. So let's talk about some of the occasional tasks. We've just covered what happens on a monthly basis. So what do we do on an occasional task? These primarily include tasks like processing member withdrawals, something that you might do once, maybe twice a year, or entering unusual security transactions, which could include things like stock splits or stock dividends, spin-offs, mergers, acquisitions, or litigation settlements. These are things that you may only do once or twice in every couple of years, so they are pretty unusual transactions. Now, member withdrawals get very, very complicated. There are a lot of different ways that members can be withdrawn, and we're going to step through some of the basics now. But just know that I have done entire webinars focused on nothing but how to process member withdrawals in the various permutations and why you would choose one method over the other. So for further resources, reference, I'd point you to those resources as we go. Always follow your club's operating documents with respect to fees, valuations, and most importantly, dates. Your club says that you're going to pay out a withdrawal in 30 days. Pay it out in 30 days. Don't make someone wait 90 days for their payment. So we recommend that you don't limit any member's ability to withdraw. A lot of clubs think that they're going to want to make sure that everyone's focused on the long term, and so they prevent them from withdrawing over the course of a year, or once you join, you can't withdraw for 3 years. These are we think are not very realistic schemes. We also don't want to penalize members when they withdraw. It used to be that it was standard to charge a 3% withdrawal fee. Well, today, transaction costs are probably well under 1% and may even be negligible. So our best practice today is to only charge members any direct costs of their withdrawal, not to charge any additional withdrawal fee. If somebody really wants out of your club and is only staying in because they don't want to pay the fee, are they really a benefit to your club? Don't allow the withdrawing member to dictate terms and say, no, 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 I don't want stock, I want cash. It's not their call, it's your the members call on how to pay out for withdrawing members. Be timely and let the club accounting software do the heavy lifting. The software is great at this kind of processing. So all these different combinations can be very confusing, but let the program help you out. Now, members can withdraw involuntarily, which means you kick somebody out of your club. They can be voluntary. Someone chooses to withdraw a portion or fully from the club. And then we have the death or incapacitation of a member, which is the grounds for a full immediate withdrawal. There are also ways that members can withdraw. They can be paid out in cash only or stock only, which is really rare. Usually it's cash plus stock. And withdrawals with stock can have a huge advantage, both to clubs and individual members. So before you simply pay somebody out in cash, make sure you understand the ramifications of a cash versus cash plus stock withdrawal. This is from an article I wrote for Better Investing magazine in 2010, which steps through the decision tree to show you how the best options are, what the best options are for withdrawing members from a club and paying them out in which method. At the top, is it a full or partial withdrawal? For a full withdrawal, over here on the left side, does the club own appreciated stock it will consider selling? So you've got a stock that's gone up quite a bit in price, and yeah, you're thinking, gosh, the stock may be overvalued, so maybe we will get rid of that stock to cover this withdrawal. If that's the case, yes, we suggest that you don't sell the stock, you transfer those shares to the departing member and pay the balance in cash. Huge benefit to the club of deferring capital gains. If you do that, no downside to the individual member other than they get stock that they can immediately sell if they wish, or they can hold on to for the longer term. If the stock doesn't have any appreciated stock over here, then we ask, does the club own depreciated stock it will consider selling? So do you have a stock that's a loss that you want to get rid of? If the answer is no, then we go ahead here and pay from cash, and we're done. If the answer is yes, we do have a loser stock that we want to get rid of, we can sell the shares there, or we can sell some shares and sell some shares and pay the balance from the club's existing cash, and then the withdrawal is complete. So that's a very straightforward decision tree that you can refer to. And we include this on the My iClub website, and it's part of our education process to help you figure out the best way to help you process those withdrawals. And we've got another tool that I'll show you in a minute, but to process a withdrawal, there's a lot of steps that are involved here. So the screen gets pretty complicated. We've got the member's name, withdrawal type, full or partial, the withdrawal date. So this is the date on which the member announced their withdrawal, so to speak, or their intention to withdraw. The payout date, again, this is what your club says that if you're going to pay out within 30 days, then you check the payout date would be 30 days from the announcement date. Check this box if the user is withdrawing stock from the club. And then we click the Continue button, and we have a few more tasks that we need to figure out here. Is there a penalty fee that we have to enter? We calculate how much their withdrawal is worth. Is there a withdrawal fee or a percent penalty? It shows you the amount to withdraw. We click Submit, and now because we selected a stock withdrawal, we need to figure out which of the stocks that we're going to sell, and we enter that value over here on the right, which shares that we're going to transfer, rather, not sell, but we're going to transfer 4 shares of Fastenal. We're going to give them the balance in cash. So we click Submit, and here we have the confirmation screen. that shows you the amount of cash that we're going to give them, the amount of stock that we're going to give them, the number of shares that we're going to get them, and then we click submit, and we have a complete withdrawal there. So you can see there are a lot of steps that are involved, but potentially by transferring the shares, the club may be able to defer some capital gains and be fine for the departing member. Now I know that's all complicated, but we've got an easy way to kind of figure it out. Here's the withdrawal report. We have a tool on my iClub called the Withdrawal Scenario Calculator. So in this case, you select the withdrawing partner. Is it a full or partial withdrawal, and the withdrawal date, and then you select this button, Calculate Best Possible Withdrawal Scenarios. What this tool does is it gives you a very long report that says, all right, using the valuation as of this date, here's the amount due, here are the recommended scenarios. First, transfer appreciated securities with any remaining balance in cash, and then here are the list of the securities with the maximum capital gains, and then going down. So we're putting the priority here and explaining how this transaction could occur. The second step here, sell depreciated securities to raise cash. Then we show you here are the ones with the biggest capital losses. So start at the top. If you're willing to sell those stocks, that would be good. The club would get the capital loss, you'd raise the cash, and you could go on from there. And the third option is to pay off the member in cash. You've got not enough cash in your account, so you're going to have to do something other than that, or you can raise cash by getting everyone to contribute at the next meeting. Now, we have not recommended scenarios, which means sell appreciated securities. When you sell appreciated securities, the rest of the members get an immediate, as of the next tax year, capital gains tax that they're going to have to deal with. So if you're going to do this, we recommend selling the stocks that had the lowest capital gain. There's no reason to generate a lot of capital gains for no reason. If you want to get rid of that stock, transfer it. And so that is the situation here where it's not a recommended scenario. So we go through that for every transaction with its full withdrawal and present to you the best options. You can print this out, take it to your club meeting, and have them discuss it in person, and you've got all of the language that you need to help them to figure out what the best way to get rid of, to handle that particular withdrawal. Now, there are other uncommon security transactions. Some are pretty straightforward, a stock split or a stock dividend or an acquisition where you received cash. Another company bought out your company, so you received cash. That's just a sale. You just process that as a sale. A stock dividend where you receive shares of stock instead of cash is just like a stock split. A 5% stock dividend is a 1.05 to 1 stock split, so enter it that way. Others are more complicated, like a spinoff or an acquisition where instead of receiving cash, you receive stock or stock plus cash, mergers, and litigation settlements. Those are all handled in many different ways. We have an FAQ, frequently asked questions function on iClub.com. iClub.com/FAQ is the address. We publish the details for how to enter all of these different types of transactions, these one-off transactions, these corporate actions, so that you have detailed instructions on how to enter them. So go there first and instead of trying to figure it out. So here's an example. Last year, Darden Restaurants spun off Four Corners Property Trust. So we have here the instructions that our team has put together that show you how to enter that transaction. What are the values you use? What's the date? Here's the link to more information if you need it. And then from there, you can use that information to enter that transaction. So in this case, here's an example of a stock split. So you enter the number of shares. Apple had a 7-for-1 split. So you would enter that, click submit. There's a field here, cash for fractional shares, which is where you would enter any cash in lieu if you needed that information. Recording the spinoff, here is an example of how to record that spinoff that I talked about. We enter the date, we enter the parent company, Darden Restaurants, we enter the number of daughter companies that are being spun off, which in this case is simply 1. We click continue, and then on the second screen, we have to enter either the price as of the date of the transaction, right here, or the remaining basis percentage. Now our instructions say we can use the remaining basis percentage of 89.39%. So we suggest that you enter that number over here. And then the number of shares that you received and the price per share, which we provided in our instructions, the amount of cash that you received here, you would enter, what account it was, and then from there, click submit. Now that's a pretty easy, pretty straightforward spin-off, but if it was the first time you were doing it, you could see that you could easily get lost. But the steps that we have provide the guidance that you need to enter that transaction successfully. Now let's talk about the annual tasks. These are the things that you do once a year. Just 4 of these that are really important. One is closing the books at year end. The second is allocating the income and expenses for the year. The third is convening your audit committee to review the books. And the fourth is to prepare your club's federal and state tax returns. The closing the books procedures ensure the accuracy of the club's records, make sure that everything is reconciled. They help you to get ready to prepare for the club's annual tax return. And we do webinars in December or January that review the year-end procedures in depth. So you can find the archives of those webinars or keep it in mind later in the year to watch for the announcement of our Closing the Books webinars, where we'll step through that procedure for you. The second task is to allocate your income and expenses. This is something you only do once at year end. You never do this at any other point. It calculates each member's share of the club's income, expenses, gains, loss, charitable contributions, etc. And this is the required information that all your members are going to need for the preparation of their clubs and their individual tax returns at year end. So this is, again, a task that you do once a year. You go to the Allocate Income and Expenses screen. You select the year of allocation, which would be the most recent year. Click OK. If you own real estate investment trusts or other non-operating company securities, you may have a qualifying dividend amount or an unrecaptured Section 1250 gain amount that's reported on the 1099 div that you receive at year end. So you'll need to enter that information here. Again, another reason why we might want to avoid those real estate investment trusts in our club portfolio. It means we can't do our income allocation of income and expenses until we get the 1099s. And then we have our allocation of income and expense reports. And you can see it's got our dividends, both qualifying and non-qualifying, interest received, tax-free interest, short, long-term capital gains, other income, expenses, non-deductible expenses, foreign taxes, charitable contributions, and the total each year of each member's net gain or loss as being part of the investment club. Every year, every member is responsible for reporting their share of the club's gains and losses to the IRS and to their state. So this is an integral part of that particular process. The information here will flow into the tax printer module to generate your club's tax returns. Now the third task at year end is to audit the books. And the audit committee should be convened in January. They should review the books for accuracy, for completeness. They can take a look at the transactions one by one, or they can select random transactions from throughout the books and make sure that what's been entered matches what is shown on the financial institution accounts. Now we have, again, we will cover this in our Closing the Books, cover the process of conducting an audit, but we also have a guide, a PDF, and it's in the handouts here that will help you go through. It's a checklist of everything you need to know, about the verification and of the club's books. And you can also download that from the My iClub website. So And the fourth task is preparing the club's tax returns. Now, every club has to file an informational federal tax return, a every year, Form 1065. And please keep in mind that as of 2017, the IRS deadline for partnership returns is changed to March 15th. It's not April 15th, it's March 15th. And that'll be for 2017 and for the 2016 tax year and all years going forward. And there are no exceptions to filing. All investment clubs must file, whether you have no members or no income, no expenses, no gains, no losses. Some people think, oh, we were inactive, so we don't have to file, and that is not the case. You do need to file. Many states also require filings. Now, we make a federal tax printer module and state tax printer modules for 14 states each year. The advantage of that is that we just pull out the data that you enter into your club accounting software, and we generate the returns that you need. We prompt you for some additional questions, and then you can print out those reports, and you can be submitting those and getting them done. So watch for our year-end tax preparation webinars in January or February, where we'll demonstrate how to do that and answer any questions. But do keep in mind that new deadline for next year, March 15th, for club partnership returns. So I know we've gone over a little bit, but if you have some questions, you can use that go to webinar application question box, and we can take a look at it. We have, I see that our team in the back office has been answering quite a bit of the questions here. Marshall asks if husbands and wives can be set up with a joint combined account, or should they be individual members? And Marshall, each member of your club should be an individual. You should have no joint accounts, both from a pragmatic reasons, where it just becomes difficult if things were to happen, and also it adds a level of complexity. So a partnership, by definition, means we have partners, and those partners are individuals. So we recommend that you do not allow joint accounts of any kind in your investment club. Okay, well, I think we've covered quite a lot of the questions. I see a lot of specific questions. If you have, Joan asks if the March deadline is for federal taxes only. At this point, we're not aware of any states that have shifted their state tax deadlines for partnership returns, but you have to watch out. We just have to, we're going to wait and see, and we will let everyone know. So federal taxes are definitely going to be due on March 15th. We don't know about states. Now, in terms of your club, we don't think the federal returns are going to be much of a problem. We've had that module released in January for the last couple of years, so you should be able to finish your taxes by March 15th. The problem will be that you don't get your 1099s from your broker until the end of February. So there's a very short window there. If the brokers are held to this February, February 28th deadline, March 1st deadline for the 1099s, that could be a problem. And some brokerage firms have been consistently late past that March 1st deadline, February 28th deadline, and so that causes more of a problem. So you're going to have to watch that and just be ready to go. Again, we have the webinar, and you can step through and do a draft run of the tax printer module, and then just run through and confirm everything. Once you get those 1099s, just in a matter of a half an hour, you could have it all done if you do the prep work correctly. But do keep that in mind as we get closer and closer to next year. Dorothy says, when a member leaves, do we have to do an allocation of expenses for them? No, the member withdrawal process in My iClub will create and will allocate to that departing member their share, and then remember that at year end. So you don't have to run a separate allocation of income and expenses. The program does it as part of the member withdrawal functionality there. All right, I think that's just about wrapping things up. I want to remind you that next month on August 10th, we'll be presenting another Better Investing Investment Club Treasurer workshop called Club Accounting Reports to Guide Your Club to Success. We'll be looking at the monthly and, again, the occasional and annual reports that are available to your investment club that can help you to interpret your club's performance, to understand how well your club is performing relative to the index, to see how the individual equities in your club are performing both on a price and a fundamental basis, as well as the member status report and all of the many copious reports that we provided at My iClub. So we'll go through those in detail, and we will address your questions and carry on with that portion of the club treasurer's duties. So I want to thank Charles and Sean in the back office, and thank you as well, Dennis, for hosting tonight's presentation. For more information, you can find us at betterinvesting.org or myiclub.com, and also I invite you to visit us at iclub.com, which is our corporate homepage with information about all the iClub Central products. And finally, if you do have any additional questions, you can email me at gerlach@iclub.com.
Perfect. Thank you, Doug, for another great presentation. A lot of wonderful information, and we certainly appreciate the time you spent helping us out. We hope all of you enjoyed tonight's presentation and gained a better understanding of how to be the best treasurer your investment club has ever had. As Doug mentioned, I want to extend a big thanks to the folks working in the back room to help make the presentation run smoothly. Can't do it without you folks. And we hope you all enjoy the rest of your day and look forward to seeing you on August 10th. Good night now.